Welcome into the show today, guys. You're in for a treat because if you have questions about NFTs or anything crypto, if you're crypto curious, you're in the right place. We have Josh Rhodes joining us today. Josh, thanks for being a part of this.
Thanks, guys. Awesome to be here.
We're known as the slow talkers because we're from the South, but your site is called Crypto Y'all.
Yeah. I probably talk a little bit slower than y'all compared to where y'all grew up and where I grew up.
How did you get crypto curious? I'm interested in that story.
The phrase?
Well, no, it's just being curious in crypto, I guess.
Well, I think it's impossible to explain that without explaining where I'm from, but not in detail. But I like to tell people that I basically grew up one generation. I guess one generation removed from extreme poverty. I grew up in Northwest Alabama, great place, awesome family. They loved me. I was never without, but we weren't rich. We weren't really middle class. And my grandma had to make ketchup. Had to make spaghetti sauce with ketchup. Like she couldn't afford produce always. And we made our way. My dad was a Marine Corps veteran or Vietnam veteran, Marine, and came home from Vietnam and started a business selling lumber. And I never knew anything, right? You growing up, you don't know what you don't have and all that stuff. And he did the best he could, but he was really generous. Like people would, I lived out in the country, like people would drive up in our driveway and like borrow money from my dad. To pay utilities, to buy groceries, to pay for like baseball jerseys and stuff like that. And when I learned about that a few years later, I was like, my gosh, that's awesome. Because then they would come back and pay him back every once in a while. And it was like a handshake and a smile. Like I grew up that way. But I could reach my arm out and touch poverty at any given time. One day I was in my mom's in the home office. My mom was balancing the checkbook. And we had this crazy book by this crazy guy called Robert Kiyosaki, Rich Dad, Poor Dad. And that I didn't read it that day, but 10 years later, when I dropped my ego and I read the book, I started understanding what passive income looks like, assets, liabilities, generating passive income, all that stuff. And I started buying assets. I started investing in real estate. All because I want to be generous like my dad at the end of the day. But I knew I couldn't do it trading time for money. And so my crypto curiosity came because I learned the language of investing in asset and passive income from real estate. And then the 2008 mortgage crisis happened. I was flipping a home. It was one of my first real estate investments. Literally the day I was putting the for sale sign in the front yard of this property, Bear Stearns had just gone under. If you guys remember when they crashed, it was like one of the first dominoes of the whole subprime mortgage crisis. And I remember thinking to myself as a young guy, with literally a baby on the way, first child, going, what have I done? Like, this is a bit, crazy. Somebody comes slow rolling down the street in a vehicle. And like a crazed lunatic, I walk out into the street and wave them down with both arms. And I was just like, hey, are y'all looking for a house? and I even gave them the old fashioned, like roll your window down crank with your hand. And I was like, hey, are y'all looking for a house? And it was a guy and his daughter who just graduated college. And they were looking, she has a new pharmaceutical job and they were looking for a house. And I was like, y'all come on in. And the next day I had it under contract with those folks. So fast forward from that, I got out by the skin of my teeth, like literally just sold my way out of a situation. And from that moment and then getting into real estate investing, buy and hold, rentals and all that stuff, I learned the language of assets and property. And then crypto, I got into crypto in 2018. Obviously, Bitcoin emerged as like that phoenix from the ashes of the 2008 subprime crisis. So the whole crypto curiosity thing, it's all part of my origin story. It's a part of my real estate passive income story. And I just fell in love with crypto because of all the awesome traits that it has.
You say that Bitcoin rose from the ashes like a phoenix, if you will, from and you referenced the 2008, 2009 mortgage crisis. Explain
Yeah.
that to me.
Yeah.
Why do you say that?
Sure. Like, well, any of your listeners could go and Google the Bitcoin white paper and read it for themselves. But, in 2009, I think it was 2009 is when the Bitcoin blockchain officially was materialized and available for people where you could actually start mining Bitcoin. And the person who, created Bitcoin is anonymous intentionally. We don't know exactly who he is. There's a lot of conspiracy theories or who she is. But the whole thing was to create a decentralized system that would prevent Wall Street or any central government from creating a level of manipulation that it would topple so many people's individual private wealth again, and to create a peer-to-peer network to where we can interact with each other without a third party, aka a government or institutional corporations, messing around with our stuff. And so Bitcoin was born kind of from that whole crisis.
And so then when you said you got curious about it, what was it? Do you remember a specific, because you said not until 2018.
Yeah.
What was it that kind of spurred that on?
Well, I think like many investors and humans, we invest around the hype and the emotion of things. If you ever look at those, there's a lot of graphs and images on the internet that show the different psychologies of investment. I think when I got in on Bitcoin, it was after the big dump of 2017. It was a major price collapse in 17. After that, it started to go back up again, long story short. And I think I just caught a whiff of the hype that was happening, and I got on board. Every time there's a new pump in the market, in any new market, this is an infantile market, 14 years old, 13 years old. Anytime there's a big pump, there's a massive amount of adoption because people are trying to they're FOMOing into a movement. And so I, like everyone else, FOMO'd in. Well, good news is I FOMO'd in when Bitcoin was like I don't know, I think it was like $11,000 or $12,000. You can go back and find tweets of this one guy named Nick Allen in 2011 who said, "I'm so glad I didn't buy into this garbage. It's at $2. It's collapsed to $2.70. And then some guy recently came back and said in the same tweet, I guess he saved it or whatever, "Hey, is this guy still alive?" And Nick Allen responds to his own tweet and says, "Yes, I'm alive, but dead inside."
Oh man.
Because he missed out. So I FOMO'd in like everybody else during a market pump.
So what is it that you specifically like about it outside of that? Like for you as an investor, somebody who had been in real estate, business owner, what else about you was attracted to this cryptocurrency?
Well, I'm the kind of person that once I get interested in something, I kind of turn into a nerd and go and do a deep dive. And, when you get into real estate investing and you get into business ownership and you start looking around as an entrepreneur, as an investor, you start looking at the world with business ownership eyes, you start to respect the traits of money and assets. And I think the traits of Bitcoin and crypto, the greater crypto market, although Bitcoin is a very different animal, the traits and characteristics of Bitcoin compared to the fiat dollar or even gold and precious metals, they stand out. They're superior in terms of their traits. The only thing that Bitcoin doesn't have that the other monies that I've mentioned have are they're issued by sovereign governments. And that's just something that Bitcoin is not, which is actually a pro.
What are some of the, just so we don't assume, what are some of the characteristics that you say are kind of superior?
Well, there's durability. The durability of Bitcoin and gold, for example, to be able to hold their value over 2, 5, 10 years at a time versus the dollar. There's no central government that can print more Bitcoin and create hyperinflation and therefore deflate the value of a Bitcoin. There will only ever be 21 million Bitcoin ever because it's driven by an incorruptible software on a blockchain that no government or institution or traditional bank can manipulate. So the durability is awesome. The supply and demand factors are there. The portability is awesome compared to gold. If you want to buy a house or an ice cream cone, you have to go get a dump truck or a wheelbarrow and find the high security warehouse where your gold is hidden to buy it with gold. But with Bitcoin, I could buy an ice cream cone in India from where I'm sitting right now if I had the wallet address of the vendor, and I could do it within seconds without sending it through the traditional bank SWIFT system, for example, that might take 1 or 2 days for ACH or wires to go through. So portability is awesome. There's dozens. As a matter of fact, Fidelity, who controls about $4 trillion of wealth management globally, came out with a 26-page report. They do a deep dive into this. They've been in Bitcoin since 2014, and I'm not sure everyone knew it. It's really kind of a bombshell report.
Well, that's amazing. Now, I want to hear more about how, when you first started, were you thinking about it from more of a speculation? Like, hey, I need to get in on this because I think it'll grow and I want to be able to, to cash out at some point. Because we talk about the hierarchy of wealth on our show, in where we start with cash and cash value. We go into control items like your own business and things of that nature, then into collateral, like real estate and other things. But at the very top is speculation. And we find that most people look at assets only from that aspect. They don't think about it from a cash flow perspective. They think about it as, well, I hope that it goes up in value, because they've been trained by Wall Street and other places to view things in that regard. When you started, were in crypto, was it more from that side, or did you always think about it from, hey, there's an ability for this to turn into cash flow?
I'd be lying if I said I had enough foresight to think that it would be a good cash flow engine. And also in crypto years, man, 3 months is 4 years. Like, it's almost like internet speed, like internet years, internet marketing and sales business, online business. Like, it's just crazy the way things evolve. When I got in, I came in on that speculation, through that speculation doorway. I knew that there was an accretive asset here, because if you look at the track record, it had never been hacked. It still hasn't been hacked. People have all these like cons against Bitcoin as a platform. It's incorruptible. And then it's performed, at least prior to 2022, annually. I think the returns are over 200% a year. So I was just like, okay, well, I can speculate into this. I can FOMO into this, and I think it has accretive value, and we'll see where it goes. And then, because I was passionate, I just, the more interested and the more I invested, obviously the more passionate I became. And then the crypto industry just started evolving around me. DeFi happened in 2020. The DeFi summer happened, which presented all kinds of cash flow opportunities, all kinds of short and long-term return opportunities there. And then the collateralization of crypto started emerging, with Bitcoin lenders happening, where you've got the same properties that, infinite banking, whole life insurance, and real estate can provide to lean against or loan against your property to buy more cash flowing assets. And so all that stuff kind of evolved around me that I'm happy to be able to participate in now.
All right. So you threw a new word in that equation that we hadn't heard, was DeFi. What is DeFi? Yeah.
It's decentralized finance. And it's a massive theater inside the crypto world. And the thing that everybody needs to understand about cryptocurrency is it's way more complex, or it's way more dynamic than just Bitcoin and Ethereum. And it's way more dynamic than NFTs as well. DeFinance is an area where you find a lot of speculation, a lot of risk, a lot of volatility. And you'll see investment vehicles and different crypto projects that have, I guess, more of like a two 3-dimensional, maybe sometimes a 4-dimensional earning capability, where you've got a native token, the currency itself, and then you got on top of that a rebasement or a compounding effect, where you're just by holding or staking a particular token in a project, locking it up, kind of like a certificate of deposit at a bank. And if for a lot of our traditional banker listeners, but you're not earning 2% or 4%. You're earning, in some cases, 400%, 4,000%, 40,000% APYs. And they might be variable rates though. So like I said, we don't have enough time. We could do 2 shows on DeFi, but that's kind of the world. It's like it's a bankless system where you're not asking Wells Fargo or one of the big banks to give you a 10% return or a 4% return on your money, but you can use liquidity pools. It's like a decentralized hedge fund, for lack of better words, where you and I put our money in, and the decentralized autonomous organization, if you will, has a government system in it, and there's votes, and the people make investments, and it's very democratized.
So is it fair to say that it's almost like an improvement on traditional banking in a decentralized manner, like it mirrors some of the things that we're used to, like you mentioned,
Yeah.
like CD versus and then collateralization and all those things? Like we're used to those topics in a traditional banking, but they've taken it and improved it. Is that a fair way?
100%. And I think the purists would say that's exactly what it is, and it should replace the traditional system.
So let me bring up a hot topic, and just since we have somebody with your experience on the show, NFTs. We have people in our passive income mastermind right now saying we need to hear how people are using NFTs. They feel like they're in the middle of this FOMO that you just mentioned is what kind of drove you. They're like, I keep hearing about them, but I don't understand. They're just like this crazy idea that people are selling art differently or something.
Right.
How would you sum up what an NFT is? And then I'd like to go further and talk about that along with these other things you've mentioned, how they become passive income streams, or can they become passive income streams?
Sure. So let's keep it country simple for a second. And let's just say, when you buy a house, you get a deed at the county courthouse that says, this house belongs to Joey. This house belongs to Russ. This house belongs to Josh. Well, an NFT is effectively a virtual or a digital deed that certifies the immutable ownership of a particular digital or now even physical assets. So like a home in, I can't remember in Florida, the name of the town, a home on February 10th was auctioned off. The winning, it had over 7,000 bids. It was sold as an NFT. So the owner not only has the traditional courthouse deed and everything, but they also have an NFT. So if they ever want to sell the home, they can sell the NFT, and whoever has the NFT owns, it's on a blockchain that a company called Proppy created, and it's the verifiable ledger that says Josh owns this home. Well, now that's like one of the first of its kind, but it didn't start that way. It started with crazy pictures and artwork, right? Like Bored Ape Yacht Club and digital zombies and weird stuff. And the reason why it started on that side of the spectrum is because we didn't have language for smart contracts, which ultimately smart contracts is what we're really talking about when we talk about NFTs and having ownership. Because I could sell you my crypto y'all NFT today, and you get all this, you own all this, intellectual property, or you own X, Y, and Z benefits. But if you ever sell it, I might have built into the smart contract a 2.5% origination fee of some kind. And every time that NFT is sold, I still get paid, which is an awesome passive income strategy. For those of you in your mastermind who are asking that question, so creating these assets. So like when I sell my house today, and then someone else buys it, and then they sell it in the future, I don't get a fee off of that resale of my past house. I've owned like 6 or 7 primary residencies. I'm not making any money off of those that I moved out of. But with NFTs, you can. And that's kind of the short and skinny. We can go wherever you want to with that.
Well, can anybody create an NFT? And if so, how would they do it?
They can. And it depends on how dynamic you need the NFT to be. NFT stands for non-fungible token. So we need to be able to put that on the table right next to Bitcoin, the dollar, and gold. So if you're holding a dollar and I'm holding a dollar bill and we trade dollar bills, we still have the same amount of money. But if we have NFTs, they're not fungible like dollar bills are. They're non-fungible in that they're created to be unique. Now, if you create some NFTs that are all the same, then you've kind of defeated the purpose and you've created a fungible token. So the thing that you'll see with all these projects like Bored Ape Yacht Club or something is that they're if there's 5,000 of them, they're all algorithmically unique somehow. And their uniqueness, yes, brings them value from an artistic status standpoint. But what you always want to look for underneath is that smart contract of the benefits that owners get. And so depending on what kind of NFT you want to create, you might need to partner with a software developer or someone who can do crypto software development, blockchain development. But you can go as cheap as buying a $200 NFT creator online and hosting it on OpenSea.io. You can go as cheap or as expensive as you want.
Now Russ he's actually taking his shoes off and checking his feet when you're talking about fungible things. Just in light of that, what you're saying is that they've been able to take the ownership piece and break it apart into smaller portions that then can be traded with other people, but not necessarily exact like this one token for this token. It's this particular asset that's backing it has a value, and my token will grow or lose value based on the asset behind it. Correct?
That's right. 100%. Absolutely.
And so therefore, if I ever want to trade that with somebody else, we're going to have to verify what the value of those two assets that are backing them are at the particular time that they are being traded.
Yeah. And to make it easier on you there with that scenario, these NFTs are all built on what we call layer one crypto blockchains. So Ethereum, Polygon, AVAX or Avalanche, Solana. There's different crypto networks or blockchain layers that these are built on. And the NFTs, depending on which layer or which network you decide to build them on, their native token is what they're backed by or what their valuation will come in. So for example, just before this show, I sold a purple unicorn NFT that sold for, I bought it for 0.34 Ethereum and I sold it for 1.8 Ethereum. So it's like, I bought it for like $400. I sold it for like $3,100. And that was on the Ethereum blockchain. So when the auction closed or when the sale closed, the smart contract immediately distributed ownership of my purple unicorn, which is actually a character in a video game that's coming up. It distributed the unicorn to the new owner, and it distributed to me the Ethereum that I was due. There was no agent, there was no broker, there was no middleman. It was decentralized.
Russ, are you thinking what I'm thinking?
This may be the first time someone sold a unicorn and the three of us had actually made money. And for our avid listeners, they know exactly what I'm talking about, Josh.
Yeah, 100unicorns.com is about to get a whole new facelift, is what I'm thinking. Russ, what do you think? Absolutely. All right, so this is fascinating, and I know we're probably crushing you with all these questions, but I want to shift to that person who has been building cash. They've been taking advantage of infinite banking and they've been pouring money into life insurance contracts. And they say, I want to now start creating passive income. Maybe this crypto world is the means by which will line up with who I am as an investor, right? Now, you've already talked about one strategy or maybe a couple in which people can create passive income with NFTs, with crypto. help me understand a couple other specific ways people are creating passive income in this genre.
Well, the crypto y'all community, we focus on 3 wealth strategies with crypto. Okay. The first one is your good old fashioned buy and hold appreciation strategy. You know, I'm going to buy some land outside of town and let the city sprawl get to it. And my land goes up in value and I sell it to the next business or whoever wants it. So the buy and hold is I'm going to pick a blue chip, what I value to be a blue chip crypto project. And, you know, I'm going to buy Bitcoin in 2011 when it's $2, and I'm going to hold it for 10 years and sit on it. Right. But a lot of buy and hold strategies though is not in crypto is not 5 or 10 years. It's like 12 months because of the cycles that we're in. And this is an interesting dynamic to pause on for everybody listening, because there are way more cycles happening in the crypto market than you'll see even in the stock market or other asset classes because of its infancy. So it's still like it's still early. Like there's still volatility. And so if you have the patience and the emotional detachment to ride the waves of the volatility, you might be able to go through 3 or 4 cycles in a year, you know, buy low, sell high 3 or 4 times just on one particular crypto. Maybe you just say, hey, you know what, I'm going to make money on Ethereum this year. If you hang with it and you pay attention throughout the year 3 or 4 times, you've got 3 or 4 buy sell moments. You can make a lot of money just doing that. And that's almost a great passive income on an annual level. That's a passive income strategy, depending on your initial capital. The second wealth strategy is cash flow. It's that definance opportunity to go and find a high yielding DeFi, decentralized finance vehicle. For example, one of them that I invest in, I put $2,000 in it. It pays 102% annual percentage yield, which comes out to about 1.9% a day on my capital. And it has a native token price that vacillates. And so if the token price goes down, the 102% APY is kind of holding the value of your balance or your purse steady. And then when the native token price comes back up, you've got even more value. But again, you got to make sure you're in the right project. Do they have doxed, you know, developers and leaders of the project? Is it something that's out in the open above the fray? You got to do your research.
When you say that you said do the research, what would the person with no experience and understanding like Joey or I in this, how would we do our research? What would be the thing that we would look for?
Yeah, there's a lot of things. I've got a checklist that I can give your listeners if they want it. But the big ones, I'll go through the big ones. Number one, do they have anonymous? Does the project or the crypto protocol have anonymous founders, or is the team fully publicized and doxed? Are they out in the open? And do they have a track record of success? I mean, this is Warren Buffett 101 type stuff. You know, who is the management team? So that's, you know, do they, you know, if you're investing in a crypto gaming platform, for example, you know, do those people come from AAA gaming brands like, you know, EA Sports or, you know, whatever PlayStation and Xbox, you know, pays people to make from these gaming studios? Do they come from there? There's a lot of crypto games these days who have a lot of the old guard from these successful multi-billion-dollar games running them. Well, I can trust them with my money. Number two is, you know, I'll just stick with gaming for a second because it's easier to talk about in the hypothetical. You know, if it's a crypto game, there's a whole play to earn gaming industry that's burgeoning right now. Is the design, are the aesthetics awesome? You know, is it cool? And is the game fun? Does it have aspects of games that we grew up with, or playability that's going to create a massive adoption effect? And what you're looking for is Metcalfe's law of adoption. You know, the more people that get on a platform, the more valuable that platform becomes, and more valuable the assets that we own on those platforms become. And so those are some of the big ones that I would start with as a beginner if you're looking at different projects. and protocols, you want to look into the actual, like, lift it under the lid. What's the market capitalization? You know, is it a $20 million market cap, or is it $1 billion market cap? Because if it's a 20 million, you're going to get a lot more volatility, but you have a way better chance of 10xing or 100xing your dollars or your value there than you do with something that has $1 billion market cap, because they move a little bit slower and they're already kind of stabilized. So that's short answer. We could go deep as you want to on that.
All right, Russ, you shut him off. He was about to hit the third wealth strategy, and you just totally cut him off.
Well, the third strategy is the collateralization, or the leverage strategy. So there's a lot of areas now, a lot of vendors online, a lot of lenders that'll allow you to, for example, I took a Bitcoin position of mine from one of my portfolios. I brought it to BlockFi, is my preferred lender. BlockFi will give you a 35, 50%, 75% loan to value on your Bitcoin or on your stable coin, which is pegged to the US dollar. It's basically a digital version of the dollar. And I took that money and went and made a down payment on a rental property that pays 6 times what I'm paying on my interest payment back to BlockFi for my Bitcoin collateral, my loan. And up until recently, they were also allowing my Bitcoin to sit in an interest earning account while in a loan. So I was actually earning 4.5% on the Bitcoin. I was paying, I think, an 8% interest on the loan that I got. So I had about a 4% to 3.5% spread there. And then my home cash flows $600 a month. So, you know, I had another $20 or $30 I had to pay out of that towards BlockFi. But, you know, that's what the wealthy do, right? They don't sell their assets, they loan against them, and they create more cash flow with them. And so that's the hope.
All right. Well, clearly we've only scratched the surface on crypto. This was just an objective for Joey and I to learn about NFTs and what that even meant. I don't even think Joey knew what NFT stood for. So thank you for clearing that up for us. That was going to be a discussion after the fact. And you showed him how he can actually take unicorns and make money on it. Whether he could do that, I have serious doubts, Josh, that he could actually make money in unicorns, even if you showed him how to do this NFT thing. Somebody wants to learn more about this. Somebody else is crypto curious. Where would they go?
Yeah, just go to our website, cryptoyall.co. You won't find a lot of about us or biographies there. You'll simply see an opportunity to opt into my case study. Get on my newsletter. I'll send you a case study of how I took one of my portfolios from zero to a couple $100,000 and watch it and enjoy it. And if you like the email, the email newsletter is the Crypto Curious newsletter. And I'll just hit you with all kinds of goodness there on various topics inside of cryptocurrency.
Dude, that's so awesome. Thank you. So yeah, take Josh up on that. Go to Crypto Y'all for non-Southerners. That's YALL.co. CryptoYall.co.
All right. And Josh, thanks for being a part of this show. Thank you, as always, for listening and for being a part of the movement of Wealth Without Wall Street. If you like this, please share it. Please rate and review us so other people can find us online and also be a part of this movement along with us. We'll see you on the next episode.